It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast as we cover 7 days a week, the very latest in property news every morning. And of course, we are on iHeartRadio, Spotify, Apple Podcasts, as well as Amazon. And feeling pretty good because we've woken up to another Friday morning. The weekend is calling us. It is the 12th day of April for 2024. Now, I want to ask you a question because it's something that I don't know a lot about, and that is fractional property investing. Do you know anything about this? Well, it involves a company acquiring a property with potential for value appreciation. And the property's cost is divided into shares, which are then sold to investors. And these investors can earn rental income from the property and may also benefit from capital returns upon the property's sale or share divestment. As I say, it's something that I don't know a lot about. This flexibility does contrast with whole property ownership, where selling entails transferring ownership of the entire property, which with this whole fractional investing is different. So investing via a fractional investment platform, it does involve several steps, as you might imagine. Signing up first off, and then browsing available properties and selecting potential investments. Now, some platforms offer this automated property selection to diversify investments right across multiple properties. The benefits, what are they? It's a bit of a mystery to me as well, but some of the benefits of fractional property investing include lower entry costs, and I guess that has got to be the big one, enabling investors to access real estate with minimal upfront investing. So that's just a little taste, I guess, of what it's all about. We're going to find out a little bit more now and take you to Dubai this morning and catch up with our friend there, Mario Volpi, who is a property expert and a media commentator, because they have this fractional ownership going on in Dubai. And Mario, you have a special guest with us this morning.
Yes, we have. I've invited along Robert Farquhar, who's actually a gentleman who works for a company called Pripco. So I thought it would be good to actually introduce Robert in to discuss the legalities of fractional ownership, what indeed fractional ownership is, to highlight any questions that the listeners might have.
Yeah, great. Well, you've set that up really well. So a very good morning to you, Robert. Great to have you on.
Good morning, Craig, and thank you very much for that introduction, Mario. It's a pleasure to be here.
First off, tell the listeners, Robert, all about what fractional ownership is about.
Yeah, of course. So fractional ownership breaks down that co-ownership even further. So rather than you and some friends purchasing a property, you don't even need to know the other people. You can come in and you can take 10%, 5% of a property, and other people that are interested in that property take the remainder. It's all managed in a fully legal way via a regulated company. It means you can invest in real estate without having to have the full amount.
Before you get too excited, this is more of an investment. So you're not going in with somebody to live. It's an investment, right?
Exactly. And that's the main difference between this and like a timeshare. This is purely for people that are looking to invest in the real estate market rather than actually go to that place and live in it.
And tell us a little bit more about the regulations. Like, it's regulated, you've mentioned that. How long has it been regulated? And I guess how long has it been around?
So throughout the world, a lot longer. Dubai, it's still fairly fresh. It's a few years old. And I think the main differentiator between how we work here and where it's been regulated in other parts of the world, we're much more progressive. So the regulator here, the DFSA, the Dubai Financial Services Authority, they look at how other regions do this. They take the best bits and then they incorporate them into their regime.
Okay, and the sort of people that are interested in this, we're going to talk about how many people can take the option up on a single property in just a moment, but what sort of people do you interact with? Like, I guess, what is the demo and, what's the background for people looking to do this?
Now, that's the beauty of this, and it's a conversation I have with my marketing team fairly frequently. The demographic is enormous. If I say, is it primarily men or women that invest? It's both. What about age ranges? It can be from 21 to 60 to 70.
And looking at a property, so how many people can actually get a bit of a slice on the property as an investment?
So there's regulations around this, as we mentioned. One of the regulations is designed to protect the individuals. So we don't want any one investor owning too much of each property. The maximum investment allowed per individual is 33%. So that means there's a minimum of 4 investors and a maximum of however many. My company, for example, we do a minimum investment of 500 dirhams. You take the price of the property, you divide it by 500, that's the maximum number of investors. So a more expensive property can have more investors.
Now, I guess there's a rationale. I'm just trying to understand. Please break that down for me. So if somebody is not allowed to have half, I'm just wondering why is that? Like, if it's a fractional thing, what's the thinking behind keeping it below that?
So it's just to protect investors. So this is aimed primarily at retail investors. So just people on the street that want to see some of the benefits of the Dubai real estate market without having to put in the full amount of capital. These are people that may not understand exactly how to manage a property, which is why we take care of that. We don't want them to be in a position where one individual that has over 50% of the property has control of that property, because ultimately we work on voting. We manage the property. However, we don't own it. Investors own it. So when we want to make changes to the property, we look at them, we assess them, we cost them out, and we say, this is a good deal for you guys. But ultimately, those investors are the ones that vote on it and say, shall we do it or not? So if there's one investor that owns above 50%, whatever they want is always what's going to happen. So the DFSA just limits that down to try and make it fairer for all the investors.
Okay, great. Got it. Yeah, that makes a lot of sense. Thank you for explaining that to me. Okay, so we're looking at a property. What's the minimum investment that I can make?
It's 500 dirhams. It's as low as that. The reason we set it low is to enable anyone to invest. We don't want to stop real estate being in the hands of individuals that want to see the benefits of it. For a long time, we've all known that if you invest in real estate, you get good returns. We all know that. We're in the real estate market here. From a very early age, you buy houses, you buy properties. If you can, you then buy another one and you rent it out, and you are just set for life. This is enabling people that can't afford that second property in its entirety to still get the returns from it. If you own 10% of a property, you get 10% of the returns.
Yeah, so right around the world, I think people's ears, we were just talking about the fact that we've got an audience everywhere. People sort of maybe playing the stock market, they're thinking, well, wait a minute, if I can throw 500 or maybe make it $1,000 and I can do that across multiple properties, it's a little bit like the stock market, except it could be argued it's a lot more sound, bricks and mortar and that sort of thing.
I agree. I mean, we have a saying, safe as houses, and it just describes the real estate market.
Okay, so what is, like, if you look at somebody that you're dealing with who might have a lot, have you got somebody that's like got 3,000 shares in 3,000 different properties?
Not yet. So we've recently achieved our license and we've launched into the market. So not yet, but give us a few months.
What about in terms of your market? Like, obviously the UAE is pretty important to you, but like globally, penetration for reaching out and having those people filter into where you're working there?
Globally, the global market is obviously the key market for us. We source our properties primarily from Dubai, within the UAE. However, investors can come from any country in the world, as long as it's not a sanctioned country. They're the ones that realistically, I think, see the most benefit in this product. Because, I mean, listen, I'm from the UK, so let's take that as an example. You buy properties and you don't focus on yield. You focus on capital appreciation. You know that property price is going to keep going up, but you don't get the cash flow each month. You don't get the yield off the back of it. Dubai, you get the yield. You get very solid yield. You still get the capital appreciation as well. So I know a lot of people from the UK really focus on investing over here in Dubai. The biggest problem whenever anybody wants to invest in Dubai is the risk associated with it. People are unsure. Now, Dubai has come on a long way from its past, but it still has those connotations about risk. And, it's our job to advise people. The benefit of fractional ownership is you diversify your portfolio straight off the bat. So rather than putting all your money in one property, you can put 10,000 in one property downtown. You can put 50,000 in something in Dubai Hills. You can put 100,000 in Marina. You've got that diversification across the region straight away.
Yeah, I can see how well that works. You can cherry pick how your portfolio looks. Well, it sounds really great what you're doing there, Robert, and I know that you're fairly new with your operation, but good luck for 2024, and I'm sure that you'll probably get a couple of inquiries from the podcast.
Thank you very much, Craig. Pleasure to be here.
So that is Robert Farquhar from Pripco. And Mario, yeah, pretty interesting, isn't it? Because it means that you can, as I say, cherry pick blue chip stock and do it across multiples.
Yeah, I mean, eventually that will be the case where an investor, as Robert says, will be able to come in and say, right, okay, I'm not sure about which area to buy. Maybe I'll buy many areas. But in actual fact, instead of paying for the full amount, they just buy portions of it. And that's the beauty about this product. Diversification, as Robert said, is the most important part. It's also important to note for the listeners that it's just in its infancy at the moment here with this particular company. So there are only a small selection of properties that are up for sale in this fashion. I mean, eventually, as and when I guess it catches on, the land department might actually offer this to all sellers, really, to be able to sell to either just one individual or maybe to go down the fractional ownership route.
All right then, Mario. Well, that is certainly a nice breakdown of what fractional ownership is all about. But of course, like anything, you go into this with the eyes wide open. Make sure that you do plenty of due diligence on the company that you might be partnering with. And if everything after that stacks up, well, then you can make the decision. So thank you for that, Mario. Enjoy your Friday. And once again, thanks for coming on to the Real Estate Breakfast this morning.
Thank you very much, Craig, and goodbye to all the listeners.
Listen to in-depth discussions with industry leaders on investing options, understanding different suburbs with insider perspectives and exclusive tips.
When the previous owners passed away, they had no relatives and they passed it on to some members of their church. I think predominantly with this Facebook post that people did with the abandoned houses, people have gone out there to investigate because it's just a fascinating property and people just love the story and want to know, they want to see it with their own eyes.
I mean, it's quite a sad story now that I'm hearing it for the first time. The people bought it to raise children. They couldn't have children. Then they died and then the church got it and then it's on Facebook. It's being tagged. I mean, that's pretty incredible sort of a backdrop. Is there enough inquiries that you're hopeful that you're going to be able to sell it to somebody that's going to bring it back to life, to its former glory?
Yeah, I think we've been very fortunate that due to the fact that it had good history last time being on Domain and Herald Sun and on the news, Channel 9 News, Channel 7 News. So we've made some contacts there and because the history's there, we've been fortunate already to get a bit of coverage.
We connect you to the best real estate information across Australia. The Real Estate Podcast.